mice taking more. Tonight, burning money, touch me, burning money. Show me your gains with your stash, burning cash. Tonight, burning money, feel the burning money. Feel the burning mice taking more. Tonight, burning money, touch me, burning money. Show me your gains with your stash, burning cash. Tonight, burning money, feel the burning money.
I just hit that without the intro. Okay, whatever. How's it going? How's it going? Crypto JPEG in the house. Yeah, we got a little bit of a pop-up live stream. Just wanted to course cover the FOMC meeting today. If we actually do get a rate cut, we will see it here live. We'll see it here live. Let's get the dancing mascots out of here and see who's chatting about this about to happen right now. Crypto JPEG saying, let's get who's back. Let's go bring on the chaos and some green candles with it. Hopefully. We shall see. So any minute now, Powell should be heading to the podium, or at least the numbers should come out. Powell usually doesn't start talking till like 2:30, 3 o'clock though, usually. Let's see. Yep. Breaking news. Screw you, Mr. Orange Man. Nothing, guys. Nothing.
The data.
But are we
Uncertainty about
surprised?
the economic outlook remains elevated, their statement says. They dropped the suggestion in the last statement that it had diminished. But there are no hints about future moves. September is not mentioned in the statement. There's no change in their line about carefully assessing data, the outlook, and the balance of risks in considering the extent and timing of additional adjustments to the target range. At the moment, labor market conditions remain
changed.
solid and inflation remains somewhat elevated. Those were the characterizations used in the last statement. As anticipated, Governors Chris Waller and Mickey Bowman dissented the first time, as John mentioned, that two governors voted against a committee decision since 1993. They preferred a 0.25 percentage point cut. Governor Adriana Kugler did not attend the
What can I
meeting
say?
to
What
vote
can I
on
say?
policy. The Fed
WTF,
says
pal,
she
100%
is attending
JPEG.
to a personal
Super Dan
matter.
House.
Guys?
I was like going
Keith,
super.
appreciate it. Fantastic breakdown, as always. As expected by many of you, policy unchanged.
changed.
Two dissents, two governors,
Oh, well.
as Mike
Here's what
repeated,
it
the
is.
first time since 1993. In the first
Not
paragraph of the
surprised.
statement, the committee says the labour market remains solid. This is the issue that Governor Waller has with the labour market and that kind of communication and language. When he made the case to cut
We got
interest
about
rates in the
25
last few
minutes,
weeks,
and, yeah,
he
he's gonna
thinks this
meet
is a
the
labour market
press.
on the edge. Ultimately, at this meeting, he failed to convince the rest of the
Daniel.
committee to go with him.
Although he did get another Fed governor, and I am curious to see what their justification is, especially after the ADP report, the better than expected GDP print, a whole host of other economic data points that have come out, as well as earnings that have continued to surprise to the upside more frequently than not. This is going to be very much an emphasis on why from their perspective.
We also have a stimulus check now coming, guys. If you didn't hear, we're still talking about these stimulus checks from tariffs, and I think now we're looking at maybe a $600 stimmy instead of a $1,200 originally proposed by Doge at the beginning of the year. So now we're looking at these $600 stimulus checks that we're talking about rolling out as soon as the before the end of the year to entice voters, of course, for the Republican Party. Stimulus checks. So. Let me know if that even matters to you. I don't think it matters to a lot of us here in the crypto space as much, other than just some free DCA money. $600 stimulus check to direct payments. That's 2021, of course. We're talking about 2025. As of 3 hours ago, tariff stimulus checks coming. Proposal seeks to tax rebates for U.S. workers. GOP bill proposes they send $600 in tariff rebate checks back to eligible taxpayers. Is there a catch? No, not really. I mean, I guess they just want to stimulate the economy. Maybe, again, I think it's more of a political move more than anything. Trying to keep, of course, more House and Senate seats going into the primaries. Okay, so yeah, new stimulus checks. What is the American Worker Rebate Act? Proposal would be revenues, taxes collected from foreign imports, which supporters say would have surged under President Trump's sweeping trade policies as the funding source for the new tax rebates. Anyway, so yeah, that's how much would that make earning less than $75,000, which is, I don't know, me. I ain't making no damn money this year. Oh, ridiculous. I'd rather them just keep it, to be honest. The inflation is just gonna go out of control. I can't wait to see how that goes. More doom, guys, more doom. Doom. Haha. Yes. Crypto JPEG coming in saying Trump didn't put him in long enough time out the other day. Is there an income tax cutoff? Yes, there is. So it is right there, $75,000. And I think you're degraded in the amount that you're gonna get. I don't think you're cut off entirely. I think, yeah, 112,000 couples filing jointly, 150,000. Thresholds above that would decrease by 5%. So again, for each dollar over the limits, again, you still would get something. So if it's not the full 600, it would be 5% less than that for the top, threshold of the economy. All right, so yeah, that's what's going on right now. Those are, of course, the biggest headlines for the, I guess, the news around the tariffs and monetary policy and FOMC. Yeah, it's all coming out. Okay, so yeah, we're just kind of sitting and waiting now for Powell. We got about 20-ish minutes till they kind of set him up and put him on a pedestal. But basically, we're still waiting on Trump's cabinet to come out and talk about crypto via their report and the assets they're holding. 2 hours ago, Trump Crypto Group offers proposals to boost digital finance. White House working group releases lengthy crypto report. Oh, it just came out an hour ago, I think. It looks like it. Let's see. Did we finally get this? I've been waiting for this for 4 months now. White House's working group releases lengthy crypto report, including legislative proposals, crypto stockpile details included. Let's see here. Where is the data? I don't care about that. They probably didn't do it yet. God damn it. All right, so the White House has released a weighted 168-page report outlining recommendations for how cryptocurrencies should be regulated, including language of banking, crypto stockpile, crypto stablecoins, and the like. The report is part of the executive order issued by President Donald Trump in January. It created the President's Working Group of Digital Assets in the Markets. As part of the executive order, we're also tasked with submitting a report that laid out recommendations for a regulatory framework for digital assets called the Regulatory Bible. The working group is also an author of the report, endorses the notion that digital assets and blockchain technologies can revolutionize not just America's financial system, but the ownership of governance and economy wide. All right, where the hell's the report? Is also tasked with assessing the creation of the digital asset stockpile. Trump proposed creating a digital asset stockpile at the beginning of the year, back in March, via the executive order. He was supposed to outline that and tell the public, and he still hasn't, and that's what we're waiting 4 months for. Trump has tasked Lutnick Investment to develop a budget-neutral strategies to acquiring additional Bitcoin, provided that these strategies have no incremental cost to the American taxpayer. All right, this is all the old news. Where's the juicy stuff? As for the stockpile, the executive order said would not acquire additional assets for the stockpile beyond these obtained through future proceedings. Ahead of issuing the order, President Donald Trump announced plans to move forward with a U.S. crypto strategic reserve, including assets like XRP, Solana, and ADA, alongside Bitcoin and Ethereum. This is old. This is all old. Yeah. A report comes just weeks after the bill to regulate cryptocurrency. Representatives are also passed the bill this month. Fact sheet circulated earlier on Wednesday. Recommendations. Order details. The working group is setting tax policy level to recognize the unique characteristics of digital assets in the report. Treasury and IRS. Oh my God. Where is it? Where is it? The working group also said the SEC should consider creating a securities and accounting report. All right, so do we just gotta freaking search out the report? My God, what a nothing article. Reserve plans still elusive as the White House as of 2 hours ago. Government crypto plans doesn't offer a ton of surprises, mostly echoing familiar policy work, and it's got nothing new on the crypto stockpiles. Wow. Wow!
What are you, stupid?
Thank you,
What
Trump,
you,
for
stupid?
nothing. So much money,
win
guys.
so much.
Wow. I'm very disappointed. Today has just been the biggest nothing burger ever, and we're still waiting for Trump. I mean, Jay Powell to come out and bore us to tears with the usual. Our Fed rate policies remain unchanged. We're gonna stay steadfast in our goal of 2% target. Oh God, freaking Jay Powell. God, it's just another day, guys. It's just another freaking day. Oh my God.
When will then be now? Soon.
Not soon enough. Not soon enough. Okay, let's see. Anthony Smith in the chat. I'll tell you what we want Powell is going to say. We're still waiting for data to new tariffs. Exactly. He gets it. Anthony Smith is 100% there. Spencer Frey's in the house. How's it going, Spencer? Hope you're having a great hump day, Trump day, dump day. Possibly dump day after today. We'll see. I think all this is still priced in. So it's pretty much a nothing burger. Worst thing that you could happen in the quarter cut in September would be worse than no cut at all. Yeah, I agree, Spence. That's kind of what we're all waiting for. Although the Fed still does not have any outline policy on whether or not they're going to make cuts in September. It's a wait and see kind of deal. That's the whole thing, the whole spiel. I still think that they should have just gave Trump 25 basis cuts just to get him off his back. He would still say it's too late, and he would still say that it's not enough, and he still wants full 3% cut. But it is what it is. Yeah, okay. So this is where we're at, guys. We're waiting for the big man to come out and speak with the purple tie, right? The purple tie. It's purple for a reason, right? He likes purple. That's what he says. He likes purple. Yeah. Not that he's bipartisan, because he hasn't officially said that. I mean, he says it's not taking political, policies into consideration. Let's see what they're talking about right now. Since we're sitting here in front of them, let's take a look. Actually, CNBC. We haven't listened to CNBC in a while. See what they're talking about.
Rate probability for 1 year from now, and it shows a strong likelihood we'll be 1% lower than we are now. Do you think, Jim, that in a year or ish, we're going to see borrowing costs go down? Because a lot of our viewers and listeners, that's all they care. They want to buy a home. They want to buy a car. They want to have another kid. Nobody can afford anything.
Yeah, so I'm going to push back against that. I don't think that the long-term rate around the 10-year rate, which is going to matter more for mortgages and for car loans and things like that, is going to really go down materially. I mean, we've even seen the 10-year yield has been around the same level for the past couple of years. Front-end rates may stay sticky lower, but the longer-term borrowing costs, I don't necessarily think are coming down. But I also don't think, as David's talking about the sugar rush, and thanks for the Def Leppard, quick analogy there.
You're very welcome.
Of course, some sugar on me, but I have
a photograph as a memory.
So I don't think that necessarily generates as much potential inflation as long as you get the productivity and wages and wage inflation stays relatively contained. But this is what we don't know.
Yeah, but also we don't want to bring mortgage rates down too low because that's just going to push home prices up. The real problem is...
Yeah, it's going to be a forever battle, especially with inflation. We'll just keep printing more money. It's the name of the game. Speaking of printing more money... National debt currently sitting at $37,169 billion, getting closer to breaking to that new quarter of $1 trillion by the end of the next month, probably middle of next month, probably in August. All right. Let's get back into. Let's take a look and see what Fox News is talking about. They're probably just ripping Powell a new one. Let's see.
500 targets. Many pundits are suggesting that this rally's entered sort of a euphoric stage. My next guest says, though, that there's plenty of exuberance out there for the right reason. I want to bring in our Partners Group Chief Investment Strategist for Private Wealth, Anastasia Amorosa. First of all, congratulations on the new gig.
Thanks so much. Thank you. It's great to be back with you.
So we had that chart, and at the top it looks FOMO. It looks crazy. Like, you can make these charts look nuts, right? But you say, no, there are reasons for exuberance. Let's talk about them. The trade momentum, the U.S. positive surprises, economic underpinnings, tax and spending bills. A lot of this stuff is just now working its way into the economy.
That's right. And each one of these points is a really big deal. But let's start, for example, with a trade deal momentum. Charles, the fact is, back in April, we had 0% of the global GDP that was covered by any sort of trade deal. There was no agreements. And you fast forward to today, and about 30% of GDP after the European deal is now covered by a trade deal. And of course, if you add U.S. back to that, you're looking at 50 or 60%. So all of a sudden, you have certainty, you have predictability of what the trade is going to look like, and that is a big deal, and I think that's why the expectations for the markets are rebounding. The second point is the U.S. economy is surprising to the upside. Well, how about that 3% GDP growth
right,
that we had?
Exactly.
All right, fine, let's extrapolate the net exports and the inventory swings, but what I'm really encouraged by is the U.S. consumer continues to spend despite some of the key concerns, and if you look at not just the economic data and the GDP, but some of the real-time data, we're seeing consumer spending be up 4 or 5% year-over-year. So that's strong. Economic underpinnings, Danielle was talking about this, but corporations are walking into this with robust margins. And even if margins go from 12.7% to 12.3% as they have this earnings season, that's still starting from a position of strength.
Historically, that's still really, really up there historically.
That's right.
Yeah.
That's right. Absolutely. And then I do want to talk about this tax and spending bill. I feel like that doesn't get talked about enough, but I posted this chart the other day from the Tax Foundation looking at the actual increase in after-tax taxpayer income income that's expected across income cohorts. And for the bulk of the U.S. population, you are expecting something like a 5% increase in after-tax income. So do we worry about some effects of tariffs? Yes. But if that gets offset by incomes being higher because of tax cuts, that obviously goes a long way.
And of course, the other.
All right. Let's stop this for a minute, and I want to get back in the chat real quick. We got about 15 minutes until Powell takes the stage. It's going to be a no rate cut for anyone just joining. No rate cut today. Yes, no rate cuts. We do have the Dixie. We also have the Dixie 2 rising still closer and closer back to 100. Crazy with all the, of course, positive spin on the tariff news. Yes, and the chat right now. We got Powell needs a Scottish headlock. Yes, Andy, 100% he does. Let's get him in a headlock right now. He's definitely up on the chopping block for more bullying by Trump. I cannot imagine what's going to happen next once Trump sees that he did not do what he told him to do. And then, yeah, Cody Piccolo coming in with the flames. Thank you, my guy, for the flames. And also, Cody, I did actually give a listen to the Godzilla. That's right, the NES Godzilla creepypasta. That was a good one. That was actually a pretty good one. I did enjoy that quite a bit. Now I just want to go back and play the old NES game again. Good times. Thanks for recommending that one as well. Jake is saying Powell is doing the right thing, leaving the rates alone. Should have left them alone last year too. Yeah. He should have just, I mean, I agree with you 100%, Jake. I 100% agree with you. It's just not what this administration wants, right? And of course, crypto and all, risk on assets. That's of course what the entire market wants. But I 100% agree with you. If we want to get any kind of, stranglehold on inflation, which I don't think we really can do anymore. I think that train is already too far gone. We can't get back on the caboose even. The dollar is dead, and I think the stable coins are going to ignite that flame even further. Kind of being the Trojan horse and getting all eyes on the depreciation of the dollar, because we're never just going to stop spending money. That's the whole point. Okay, see, Alex says he's not changing shit. 100%, he ain't doing nothing. It's already been decided. He's not changing policy at all. Spencer Frey says Trump said the 38th in the world right now with the interest rates, if I remember right. And I think you're right. I think you are right, something like that. Everyone has cut rates this year except for us. And it does seem like it is kind of political. I'm just saying. Cody Bakulo says, if you liked that, checked out the Ben Drowned. Yeah. I think I've seen that one before. Yeah. That's the one with, like Zelda Ocarina of Time, right? I think, or Majora's Mask kind of spin-off. I forget. Something like that. That one's old, isn't it? I've seen some of these older ones before. Okay, yeah, so let's see what else we got here, guys. I want to, of course, bring up Crypto Bubbles before we get into all this. It is 2:18 currently, so we got about 10 minutes or so. Till he comes out and just addresses the public and to what sort of bullying he's going to be expected by Trump this afternoon. Again, guys, we also did get the crypto, if you guys are just joining, we did get the crypto report. I just covered it, and there's nothing new on it. It's the same shit, the same stuff we saw at the beginning of the year. So I'm very disappointed today in general. I was expecting no rate cut either way, so that doesn't surprise me, but I was hoping that this report would actually outline something new other than what Trump, said back in March when he also said that we were going to also put out that report. So yeah, it's kind of weird, guys. It's a weird day. And I think right after Powell's speech, we're probably going to go back to business as usual, and more coins, making more moves to the upside. Oh, right. So yeah, let me show you if I can dig this up one more time for anyone just joining. If I can find anything new on it too. 1 hour ago, Crypto Corp could be Bitcoin's next catalyst. White House set to unveil closely watched crypto policy report. I think, was it the elusive? Maybe we didn't get the right report. I don't know. Some of these seem like they're not that long ago. We did just read one that seemed to point in that direction. Let me see if I can pull it back up. I probably closed it in a in a mad scramble. No, not that one. Reopen, 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 reopen. I don't know. I don't know where it went. Well, I just read one. Okay, so yeah, no U.S. Bitcoin reserve plans. This White House touts crypto report. That came out at 12, so a couple hours ago. So yeah, the White House released its 163-page strategy on tackling U.S. crypto policy, though it doesn't yet detail how the government will pursue its crypto stockpiles. So the lengthy report was apparently did come out, but doesn't show anything new. It says here, literally, which would remain a black box for a sector keen to learn anything new. Nothing new, nothing new. But the 160 report is likely to tell the crypto industry much about it doesn't already know. And anyone who was here at the beginning of the year knows already what we're investing into, mostly U.S.-based crypto assets, right? And I don't think it even tells you the amounts. That's the thing they're supposed to show us. I don't know. I want to wait until we hear more to really draw a conclusion to that, but it doesn't look like it's going to be anything good. We'll see at tonight's live stream. Oh God, I still have this up. I still have that up on the... This is so creepy stuff, guys. Creepy pasta. All right. God, so funny. Okay, crypto bubbles. Let's take a look at crypto bubbles, right? Crypto bubbles right now on the day, still stagnant. Still the same thing we saw this morning. Average of 4% down as of this morning. It's coming up a little bit. Average right now is about 0.5% down. So not too bad. Bitcoin in general. We have about 8 minutes left until Jerome Powell comes out. Bitcoin in general, still kind of flat, still kind of sideways. Again, baseline target, baseline. That's what exactly the price action we got. We called last night. Baseline bear, baseline bear. Okay. So then we're looking into some of the other coins here. ZBEC is still running. It does not care. Let's go. Let's go. ZBEC has not come down yet, not yet, but does look like it's starting to get a little bit overbought, in my opinion. You can see it here already double topped right now. Although it's getting slightly higher highs, it did not previously get back to its high of almost 56, so 2056. Okay, so that's what's going on with ZBEC right now. Again, one of the few in the green, as always, because it does not care what the rest of the sector is doing. Ethereum is moving a little bit right now too. It's up like $11. Oh, $11 whole. Again, all these coins are still waiting for their big breakup to the upside, and going back to close to previous all-time highs, or just the January highs like Ethereum is right now. Previous all-time Ethereum is almost near 5,000, so we're still a ways from that. Okay, so let's get back into, make sure we got all stuff lined up. Okay, Fed to see its first double descent in 32 years. Okay, that's where they're headlining over there at CNBC. Let's take a look back at Bloomberg real quick. I think I have it over here. There we go. Fed governors Waller, Bowman dissented in favor of the rate cut. Yeah, so they are starting to fight internally at the Fed, at least, at pushing a rate cut. And that's what it looks like it's happening today.
Quarters since 2021. How many times have we been below 2% Q-over-Q annualized on the core PCE? Never. In the last 18 quarters, how many times have we been below 2.5? Just 3 times, and most of that was used cars. So underlying inflation for us is stuck at 2.5%. So even if Waller's right that the tariffs really aren't that big a deal, you still have an inflation problem. And I think the Fed is not still appreciating that enough.
Although you look at, for say, housing, which is a huge component into CPI, Aditya, and prices are actually coming down in a growing number of jurisdictions around the United States. What's to say that there isn't this one-time price pop in particularly consumer goods that will fade, and you also will have disinflationary forces coming down the pike that have really been anchoring a lot of the inflation rates we've been getting?
So per our math, if housing inflation goes back to 3% year over year, which would actually be below where it was before the pandemic, that would take about 20 basis points off of the core PCE, which is why I'm saying that we're trending at 2.5 rather than 2.7%, which is where the rate was as of May. So I still think 2.5, 2.4% is roughly where you're trending, and that's a big overshoot. It's not a small overshoot.
Okay. I'm sick of hearing it. I'm going to get back in the chat real quick, guys, and then we're still waiting for Powell to come on board. He'll be here in about 5 minutes. Okay. Oh, see what we got here in the chat. Oh, my gosh. Yes. Powell's leaving the late loan. Should have left him alone. 100% agree with you, Jake, on that one. We got here. We got Spencer Frey saying Trump. Yeah, I think I read that as well before. Okay. I was back here. Okay. OG Bobian says did not get the notification. Of course not. This is good old YouTube doing good old YouTube things. I wonder if Powell knows he is gay, says OG Bobian. I'm sure at this point he knows. Trump is just staring him down and be like, yeah. Okay. Why you gotta be like that? Why you gotta be like that, pal? Cody Bakula says, when I cast your mask, I'm thinking of making a brass or bronze one for you for fun. Oh my gosh. Damn, Cody. That would be amazing, my guy. Holy crap, man. Yeah, I can't wait to see what you come up with, my man. Okay. I'm excited, man. I'm so excited. Yeah, to finally get a new mask for the channel. And also to show you a little bit here too, of course. Anyone, of course, asking what's going on with the Chrome, my guy? The Chrome. Gotta get some more Chrome, guys. We're in the dystopian future. Okay, surprise chaos. Howdy hooligans. How's it going? Matt Adam in the chat as well. How's it going? Vodka seltzer mislabeled. Did you guys hear about that? That was so funny. Yes, Bloomberg was talking about that earlier. They're actually going through the Celsius drinks and trying to find that. They're mislabeled vodka drinks as energy drinks. Oh my god, scroll across the bottom. Yes, it did. That happened earlier today. So Bloomberg's analysts were actually on their show, like going into their coolers and grabbing what they had. Just hopefully crack open one that actually had vodka in it. No, it probably just got to stores like right now and they're getting pulled. So I don't think it's going to be something that's just sat around for a little while. Okay, so yes, Jake the Snake says if we only had the end of the Fed to allow the market to decide rates. Yeah, I mean we just need a free market. That's the whole point, right? I mean that's how capitalism works, and you know. Yeah, we just need a free. Oh yeah, why are you gay? Jake the Snake. Yes, 100%. I love that meme. That's such a great one. It's a good one. Oh geez, like Mr. Powell, you are gay. Okay. Why are you? Okay, I love it. Come on, pump. 100%. Yes. After Powell speaks, maybe. We'll have to wait and see. Crypto JPEG, thank you again for the flames. Doesn't cost anything to yeah, share those flames, guys, and don't forget to like and subscribe too. Trying to build this up to 1,000 subs. That's the goal, guys. We're almost there. We're like what? We're over 80% of the way, guys. Damn, it's crazy. We're a long way to go. Cody says 1 of 2 masks for you. No shout outs needed, my brother. No, my guy, for the chaos. No, my guy. Anytime I would be proud, more than proud to show that for you. 100%. And I think you are going to do great things in the future, and you may want to be looking at what we were talking about the other night, like heading to Dubai and like really, you know, doing some, because they of course they want to bedazzle everything over in Dubai. Yes. Okay, Gamagata says good afternoon, Otaku and Chaos family. Let's get this money. Yes. Yeah, 100% Gamma also here in the chat. We're waiting for Powell to come out. We got about a little less than 2 minutes, about a minute and a half. He should be making his way here soon. Of course, we got Bloomberg pulled up. They're usually pretty fast on that. We got CNBC, we got Fox, we got everything. Waiting for something to pop off now. I might do something crazy, guys. I haven't done this before. Let's just have them all on one screen. Why not? Oh, geez, while we're waiting anyway. Let's see. Let's get that out here. And guys, if you don't have these channels, I don't either. I am a humble person living in the dystopian future, 2025, and I don't have the money for all these freaking channels. I don't pay for TV, but you can too. Also, watch stuff for free. Go to newslive.com and get all the channels you don't have to pay for. Right. Somalian Pirates, yes. Okay, where the hell did the other channel go? I just missed it. This one, that one, CNBC. Okay, I need Fox. There we go. Fox. Boom. Shakalaka. Now we got Fox. Yes. All the channels. And Bloomberg. Bloomberg's already, like I said, they're quick on it. They already got his podium up. So yeah, we're just waiting. This is totally chaos. I love it. Okay. I guess we can put some of the volume up on
the goods prices are what everyone's focused on now.
We'll see him. We don't
It's
need
time.
to
The
buy him. We'll see him. We'll see him come up. Okay, let's see. When for Loco, says Matt Adam. Matt Adam's here. How's it going, Matt? How's it going? Welcome. Hope you guys had a good afternoon. I'm just enjoying another can of Liquid Death. Liquid Death. Not a proud sponsor of Liquid Death on the channel, but I do love the drinks. I do love their water. Right, let's see what we got here. Also in the chat, of course, Gamma Goddess is here. Alec is here. If the monster did that back in the day, I'd be a wasted middle schooler. Oh, God. Yeah, seriously, 100% Alec creepypasta stuff, man. Definitely takes me back, though. I mean, the whole Melissa is already dead, and he was a childhood friend. Oh, man, that got to me. That definitely got to me. All right, so, yeah, can't be the manufacturer on the day of my... Okay, wait a second. I can blame a manufacturer for the drink, for my day drinking? Yes, you can. Yes, you can. Today, you can. Matt Adams says, chalk it up to the chaos, Cody. When for Loco? Jeez. Anthony Smith says the Federal Reserve, there's nothing federal about it. And again, definitely no reserve. 100% Anthony Smith telling it like it is. The Federal Reserve is not a federal entity. They're not a government entity. And Powell's coming on right now. All right, so let's get right on into that. Here we go. Let me refresh it. Make sure we're live. There we go. Pow.
Benefit of the American people. Despite elevated uncertainty, the economy is in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has been running somewhat above our 2% longer run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a 1.2% pace in the first half of this year, down from 2.5% last year. Although the increase in the second quarter was stronger at 3%, focusing on the first half of the year helps smooth through the volatility in the quarterly figures related to the unusual swings in net exports. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles picked up from last year's pace. Activity in the housing sector remains weak. In the labor market, conditions have remained solid. Payroll job gains averaged 150,000 per month. The unemployment rate at 4.1% remains low and has stayed in a narrow range over the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance and consistent with maximum employment. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in June, and that, excluding the volatile food and energy categories, core PCE prices rose 2.7%. These readings are little changed from the beginning of the year, although the underlying composition of price changes has shifted. Services inflation has continued to ease, while increased tariffs are pushing up prices in some categories of goods. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market-based and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5% and to continue reducing the size of our balance sheet. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to show through more clearly to prices of some goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation could be short-lived, reflecting a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. For the time being, we're well positioned to learn more about the likely course of the economy and the evolving balance of risks before adjusting our policy stance. We see our current policy stance as appropriate to guard against inflation risks. We're also attentive to risks on the employment side of our mandate. In coming months, we will receive a good amount of data that will help inform our assessment of the balance of risks and the appropriate setting of the federal funds rate. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on potential revisions to our statement on longer-run goals and monetary policy strategy, and are on track to wrap up any modifications by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thanks, Chair Powell. There's a lot of lean in the markets, and not to mention out of the administration for a rate cut now in September. Is that expectation unrealistic at this point?
So, as you know, today we decided to leave our policy rate where it's been, where I would characterize as modestly restrictive. Inflation is running a bit above 2%, as I mentioned, even excluding tariff effects. The labor market's solid, historically low unemployment. Financial conditions are accommodative, and the economy is not performing as though restrictive policy were holding it back inappropriately. So it seems to me and to almost the whole committee that the economy is not performing as though restrictive policy is holding it back inappropriately, and modestly restrictive policy seems appropriate. All that said, there's also downside risk to the labor market. In coming months, we'll receive a good amount of data that will help inform our assessment of the balance of risks and the appropriate setting of the federal funds rate.
So just to follow up, by coming months, does that include the possibility you'll be getting essentially 2 rounds of jobs and inflation data between now and the September meeting? Is that potentially adequate to make a decision to lower rates at that point?
So you're right. We do have, this is an intermeeting period when we'll get 2 full rounds of employment and inflation data before the time of the September meeting. We have made no decisions about September. We don't do that in advance. We'll be taking that information into consideration and all the other information we get as we make our decision at the September meeting.
Steve.
Thank you, Mr. Chairman. You took out the word or the notion that uncertainty has diminished from this statement. Does that mean uncertainty has increased? And I'm just wondering, the administration has struck several deals with large trading partners where it seems like we now know what the rate is going to be. Does knowing that rate add to your certainty to change policy, or do you need to wait to see the economic effects?
So essentially, the statement in our statement about uncertainty reflects what's gone on since the last meeting. So, at the time of the last meeting, uncertainty had moved down a little bit, but it was more or less even this time. So we took out, had diminished because it didn't diminish further. So there's not really much in that. And then your second question is, say again.
there have been several deals that have been struck, and now we seem to have an idea of what the tariff rates are going to be with some of our large trading partners. Does that not add to the kind of certainty you might need, or is it you're waiting for the economic effects to show themselves?
No, I think we're still, you're right, it's been a very dynamic time for these trade negotiations, and lots and lots of events in the intermeeting period, but we're still a ways away from seeing where things settle down. We are clearly getting more and more information, and I think at this point, people's estimates, our estimates, outside estimates of the likely effective level of tariffs is not moving around that much at this point. But at the same time, there are many uncertainties left to resolve. So yes, we are learning more and more. It doesn't feel like we're very close to the end of that process, and that's not for us to judge. But it feels like there's much more to come, as well, looking ahead.
Neil. Hi, Mr. Chairman. Neil Irwin with Axios. This morning we got a GDP report in which final domestic private purchases decelerated, slowest pace since 22. There was a weakness in the interest-sensitive sectors and residential investment, commercial structures. Are those not signs that monetary policy is a little too restrictive right now, given current economic conditions?
So the GDP and PDFP numbers came in pretty much right where we expected them to come in. You got to look at the whole picture. So certainly, as I mentioned in my opening remarks, economic activity data, GDP, private domestic final purchases, which we think is a narrower but better signal for future, for where the economy is going, has come down to a little better than 1%, 1.2%, I think, in the case of GDP for the first half, whereas it was 2.5% last year. So that has certainly come down. But if you look at the labor market, what you see is, by many, many statistics, the labor market is kind of still in balance. It's things like quits, job openings, and let alone the unemployment rate. They're all by many measures, very similar to where they were a year ago. So you do not see weakening in the labor market. You do see a slowing in job creation, but also a slowing in the supply of workers. So you've got a labor market that's in balance, albeit partially because both demand and supply for workers is coming down at the same pace, and that's why the unemployment rate has remained roughly stable, which is why I said we do see downside risk in the labor market. I mean, our two mandate variables, right, are inflation and maximum employment, stable prices and maximum employment, not so much growth. So the labor market looks solid. Inflation is above target, and even if you look through the tariff effects, we think it's still a bit above target, and that's why our stance is where it is. But as I mentioned, downside risks to the labor market are certainly apparent.
So on labor, given the fluid labor supply situation, is there a number for this jobs report we get on Friday that would look to you like equilibrium job growth?
The main number you have to look at now is the unemployment rate, because it's true that the demand for workers in the form of, let's call it, just say payroll jobs, that number has come down, but so has the break-even number, kind of in tandem. So, as long as that puts the labor market in balance, the fact that it's getting into balance due to declines in both supply and demand, though, I think it is suggestive of downside risk. So, we of course, will be watching that carefully.
Anything at all,
Smith with the New York Times. Two of your colleagues called for a quarter-point cut today, and I'm wondering what aspects of their argument were most compelling to you, and how you're weighing their views against those on the committee who, as of the June forecast, were in the camp of the Fed holding interest rates steady for the remainder of the year. And just in terms of the June SEP in particular, is that still the best representation of where the core of the committee is?
So on the dissents, what you want from everybody, and also from a dissenter, is a clear explanation of what your thinking is and what are the arguments you're making, and we had that today. So I think basically this was quite a good meeting, all around the table, where people were thought carefully about this and put their positions out there. As I mentioned, the sort of the majority of the committee was of the view that inflation's a bit above target, maximum employment is at target. That calls for modestly restrictive, in my way of thinking, modestly restrictive stance of policy for now. But we had two dissenters who I think, you want that clear thinking and expression of your thinking, and we certainly had that today, I think all around the table. In terms of, you asked about the June SEP, I wouldn't, that you're right, that's what it says, and that may well, I couldn't point to it 6 weeks later as expressing people's thought. You really can't do that. We don't run an SEP, and I don't like to substitute in my own estimate of what the SEP might be. We don't have one. So I'll just say that, we haven't made any decisions about September. We'll be monitoring all the incoming data and asking ourselves whether the federal funds rate is in the right place.
And just on the point about policy being only modestly restrictive, does that mean that there's actually not much scope to reduce rates once the conditions for a cut are met, barring a significant weakening of the labor market?
So let me say, my own estimate is modestly restrictive, and there are a range of views of what the neutral rate is at this moment for our economy, and so others may say it's more restrictive or less restrictive even. We're going to be at some point, when we return to moving toward a more neutral stance, we'll be making that judgment as we go. I don't think we have a preset course. It's not so mechanical as saying, we've derived with great confidence the neutral rate and that is our destination, because really we understand that no one actually knows what the neutral rate is. We know it by its works, and that will be how the way the economy reacts over time to, slightly looser policy.
ZBEC is the only thing in green right now. Look at it. There it is.
Nick Timmeros, the Wall Street Journal. Chair Powell, my question is about what have you learned over the last few months about the inflation generating and price pass-through process? And just to drill down, the June CPI report showed evidence of tariff-induced goods inflation. Now, the tariff landscape is only starting to be settled with some of these more recent deals. Given the lags between when tariffs are announced and when they show up in goods prices, is 2 months a long enough horizon to evaluate the impact and be confident that tariffs aren't impacting the broader inflation process?
I think you have to think of this as still quite early days. And so I think what we're seeing now is substantial amounts of tariff revenue being collected on the order of $30 billion a month, which is substantially higher than before. And the evidence seems to be mostly not paid only to a small extent through exporters lowering their price, and companies or retailers, sort of people who are upstream, institutions that are upstream from the consumer, are paying most of this for now. It's starting to show up in consumer prices, as you know, in the June report. We expect to see more of that. And we know from surveys that companies feel that they have every intention of putting this through to the consumer, but the truth is they may not be able to in many cases. So I think we're just going to have to watch and learn empirically how much of this and over what period of time. I think we've learned that the process will probably be slower than expected at the beginning, but we never expected it to be fast. We think we have a long way to go to really understand exactly how it will be. So that's how we're thinking of it right now.
So if I could follow up, is the reticence to look through core goods inflation being driven by the judgment that during the pandemic expectations proved more adaptive than anyone at the Fed expected? Is it being driven by uncertainty over how restrictive policy is?
You could argue we are a bit looking through goods inflation by not raising rates. We haven't reacted to new inflation, but I mean I wouldn't insist upon that. But I don't think I think the base case, as I said, a reasonable base case is that these are one-time price effects. Of course, in the end, there will not be. This will not turn out to be inflation, because we'll make sure that it's not. We will, through our tools, make sure that this does not move from being a one-time price increase to serious inflation. We want to do that efficiently, though, and that means we want to do it. If you move too soon, you wind up maybe not getting inflation all the way fixed, and you have to come back. That's inefficient. If you move too late, you might do unnecessary damage to the labor market. So there won't be, in the end, a big inflationary problem. What we're trying to do is accomplish that in a way that is efficient. But in the end, there should be no doubt that we will do what we need to do to keep inflation under control. Ideally, we do it efficiently.
Michael McKee from Bloomberg Television and Radio. The one big bill, leaving aside the adjectives, do you expect it to add stimulus to the economy in 2026? And would that be an argument for remaining on hold or cutting back on the number of rate cuts you would expect for next year?
So, of course, let me just ritual disclaimer that we don't express any judgments or anything like that on fiscal legislation or other legislation for that matter. But I would say when you think that, the biggest part of the bill was making permanent existing law on taxes, I don't think we see it as particularly stimulative. There should be some stimulative effect, but it shouldn't be significant over the next couple of years.
And to follow up, what do you, well, I don't want to put this in terms of you and the president, so let me ask it this way. Do you have concerns about the cost to the government of keeping rates elevated for longer in terms of interest rate charges?
Yeah, no, that's, we have a mandate, and that's maximum employment and price stability. And it is, it's not something we do to consider the cost to the government of our rate changes. We have to be able to look at the goal variables Congress has given us, use the tools they've given us to achieve those goals, and that's what we do. We don't consider the fiscal needs of the federal government. No advanced economy central bank does that, and it wouldn't be good if we did do that, it would be good neither for our credibility nor for the credibility of U.S. fiscal policy. So it's just not something we take into consideration.
Victoria.
Bitcoin's been already down like 1,000.
Hi, Victoria Guido with Politico. When it comes to the renovations of the Federal Reserve's headquarters that the administration has been looking into, do you see their interest in that issue as being directly tied to the president's push to get you to lower interest rates?
Not for me to say. I will say we had a nice visit with the president. It was an honor to host him. It's not something that happens very often at the Federal Reserve to have the president come over, let alone to visit a building. But it was a good visit.
Are there any aspects of the project that they've raised that you see as making you reconsider any aspects of the project?
So, this project was hatched and conceived almost a decade ago now, and we went through the very long process of clearing it through historic preservation at the National Capital Planning Commission, and a lot of back and forth there. It was very constructive. We started out to do the work, and we're very well along on that work, and I was quite pleased to have the president say multiple times that what he really wanted to see was us getting this construction completed as soon as possible. That is our focus, and that's what we're going to do.
Oh, God.
Thanks, Mr. Chairman. Andrew Ackerman with the Washington Post. What message do you take from the fact that inflation hit 2.1% last September and has bounced higher since? Why do you think financial conditions are restrictive and a neutral rate's below 4% when inflation has stopped falling for almost a year?
So inflation, when you talk about these 12-month inflation measures, you're always battling residual seasonality. So we'll have, for example, 2 months of high inflation sometime early in the year, and then inflation turns lower, and a lot of that may just be an artifact. So that's why we look at the 12-month numbers. I think inflation is most of the way back to 2%. There are things like the catch-up inflation. So, for example, all the insurance costs that they're only now going through inflation, but they actually reflect inflationary pressures from 2-3 years ago. So that's got to go through. In addition, now we have 3 or 4 tenths of inflation in core inflation from tariffs. So, and we can't really separate that out. We're not going to have a separate, kind of inflation that isn't the tariffs. We're always going to be dealing with all of inflation. But the composition, as I mentioned, has really changed. And if you go back to the last couple of years, it was all about services inflation, which was being very sticky. Now services inflation is coming down nicely. Goods inflation was well behaved before, and now goods inflation is going up. So the story has really changed. That's partially because of tariffs. It's also partially because we had restrictive policy in place, and we've seen that the result of that gradually work its way through the services economy.
Okay, the other thing I wanted to ask is, are you comfortable that BLS can continue performing their mission effectively if they take an 8% reduction in headcount and authorized spending as the administration has proposed?
I'm not going to comment on the administration's proposal. I do think, as I've said, I think that we're getting the data that we need to do our jobs, and I think it's really important that good data helps not just the Fed, it helps the government, but it also helps the private sector. People in the economy, they use this data a lot too, so it's quite important for our economy and certainly for the Fed's work and other government agencies' work that we continue to get better at data. That's what we've been doing for 100 years. We've been getting better and better and better. It's very hard to accurately capture in real time the output of a $20+ trillion economy. And the United States has been a leader in that for 100 years, and we really need to continue that, in my view.
Edward.
But you also said there could be multiple reserve currencies
Thank
too,
you, Mr. Chairman. Edward Lawrence from Fox Business. How concerned are you with the data that we're coming in, showing no significant upward trend in inflation over the past 6 months, that the wait-and-see approach for inflation is actually giving companies cover to raise prices?
How concerned am I that say that again?
The wait-and-see approach is giving...
The wait-and-see approach, what do you mean by that?
For cutting rates. You're waiting to see if the tariffs will affect
You're waiting for something to break.
So it's a wait-and-see approach.
Well, so that's where policy's restrictive. When we start cutting, it'll go toward neutral.
Okay. This delay, though, where you're saying there's a one-time price increase for tariffs, which possibly could lead into bigger inflation or more inflation. Is that giving companies cover, though, to raise prices?
Well, what may be giving, it's not our policy stance, what may be giving some companies will certainly be taking advantage of the fact of the tariffs and all of the discussion of how they're going to, companies will raise prices when and as they can. And you saw it famously in the first administration of President Trump during those tariffs. Washing machines were tariffed, but dryers weren't. But what do you know? The price of dryers went up too, just like washing machines. So companies will often they'll cross the street in a group, if you know what I mean. That'll happen. We don't see a lot of that. I mean, what we see now is basically the very beginnings of whatever the effects turn out to be on goods inflation. And I'll say again, they may be less than people estimate, or more than people estimate. They're not going to be zero. Consumers will pay some of this. Businesses will pay some of this. Retailers will pay some of this. But we're just going to have to see it through.
And just to follow, if I could, some additional tariffs have been in place since February, and things really haven't broken yet with the economy. So how do you justify to somebody who's looking for a house, who's facing a 7% mortgage and maybe can't afford those rates? How do you justify that?
Well, so the housing is a special case, right? We don't set mortgage rates at the Fed, right? We set an overnight rate, and the rates that go into mortgages are longer term rates, like Treasury rates. It might be 30-year rates, it might be shorter than that, but it's not the overnight Fed's rate. It's not that we don't have any effect. We do have an effect, but we're not the main effect. There are other things going on in the housing sector, and one of those is just there's kind of a long-term housing shortage that we have. We haven't built enough housing. This is not something the Fed can help with, but then that'll be the case even after things normalize. So I think the best thing that we can do for housing is to have 2% inflation and maximum employment, and that's what we can contribute to housing. There are lots of other jobs to do for the private sector and Congress, but that's what we're trying to get to. I mean, we've made a lot of progress toward that. We have a very good labor market right now. Inflation, we were very close to 2%. We're seeing some goods inflation move us away, but so far not very far away.
I agree, Spence. Those are good questions you was asking.
Hi, Chair Powell. Thank you. Well, can you give us a little more about what kind of economic data does the Fed need to see before you'll be ready to cut? I mean, do you need inflation back nearly to target? Are there other things in the pricing that you look for? Do you need to see weakening in the job market? What kind of things are you looking for?
I mean, ultimately, it could be any of those things, right? But you know, if you saw that the risks to the two goals were moving into balance, if they were fully in balance, that would imply that you should move toward a more neutral stance of policy. This is the special situation we're in, which is we have two-sided risk to both of our goals. When we paused, inflation was above target and the labor market was pretty good. So you know, that was a time when policy was restrictive when we paused. And to be restrictive is to be supporting a return to our inflation target, right? So as the two targets get back into balance, you would think you'd move in a way closer to neutral, and that the next steps that we take are likely to be in that direction. What will it take? You know, it'll be the totality of the evidence. As I mentioned, there's quite a lot of data coming in, which before the next meeting. Will it be dispositive of that? You know, it's really hard to say. We don't make those decisions right now, so we'll have to see.
Well, I guess just in terms of inflation, though, for example, like some people would point to if it remains only in goods and it doesn't bleed over to services, then maybe that's evidence that the tariff effect is going to be a temporary one-time thing. Is that kind of thing affect your thinking, or do you just need to see the number come down closer to 2?
We'll look at everything. You know, it's, as I mentioned, you know, a pretty reasonable base case is that this will be a one-time price increase. And in the end, we'll make sure that that's the case. We're just trying to do that efficiently. And efficiently means getting the timing right so we don't again, if we cut rates too soon, maybe we didn't finish the job with inflation. History is dotted with examples of that. If you cut too late, then maybe you're doing unnecessary damage to the labor market. So we're trying to get that timing right, and that's effectively what we're doing.
The Dixie's almost back to 100.
Claire Jones, Financial Times. Just a question on the dollar. We've seen it decline quite heavily this year. I was wondering if there's been any discussion about that at the meetings and to what degree that may be complicating your attempts to get inflation back to target. Thank you.
So this goes back to the division of labor between the Fed and the Treasury, as you I'm sure know, and you know the Treasury only speaks to the dollar. It's not something that's been a topic of you know, major discussion at all at the Fed. I wouldn't say it doesn't come up. If the transcripts, when they come out in a few years, they'll probably reflect some mentions of the dollar, but it would never be a major focus.
And just to follow on, if I may, to Andrew's question, I think the amount of imputed data in CPI now is up to 35%. I mean, is there any discussion of that as well? Is there any consideration of looking at alternative measures, data scraping and so on, in order to just ensure you've got a good read on what's happening to prices in the U.S. economy? Thank you.
You know, we're monitoring the situation. We do, of course, I mean, as you know, during the pandemic, we looked at a whole lot of new kinds of data. People are looking at big data sets that you can get from all sorts of places, and we do all of that. But at the same, we really need the government data. Really is the gold standard in data, and we need it to be, you know, to be good and be able to rely on it. And we're not going to be able to substitute for that. But you know, we have to make do with what we have. But I certainly hope that we get what we need.
Jay O'Brien.
Hi, Mr. Chairman. Jay O'Brien, ABC News. President Trump has obviously invoked your name a lot. He has personally pressured you. Are you concerned the way that conduct might impact the Fed's independence going forward?
I'll just say that, so I think that having an independent central bank has been an institutional arrangement that has served the public well. And as long as it serves the public well,
really?
It should continue and be respected. If it didn't serve the public well, then it wouldn't be something that we should just automatically defend. But what it gives us, and other central banks, what it gives you is the ability to make these very challenging decisions that in ways that are focused on the data and the evolving outlook, the balance of risks, and all the things we talk about, and not political factors. And so governments all over the advanced economy world have chosen to put a little bit of distance between direct political control of those decisions and the decision makers. So if you were not to have that, there would be a great temptation, of course, to use interest rates to affect elections, for example. And that's something that we don't want to do. So I think that's pretty widely understood. Certainly it is in Congress. And I think it's very important. I'll just say that.
Way to defend the central banks, Jay Powell.
Afternoon, Sir Powell. Maria Luisa Capurro from Bloomberg News. You mentioned a slowdown in consumer spending, and I wanted to see if you could walk us through what was the discussion with the committee around that. We've seen delinquency rates rising for upper-income households. How do you see that evolving in the next few months, and how much of a vulnerability that is for the economy going forward?
Consumer spending had been very, very strong for the last couple of years, and had repeatedly, forecasters, not just us, had been forecasting it would slow down, and now maybe it finally has. So I would say, if you talk to credit card companies, for example, they will tell you that the consumer's in solid shape and that spending is at a healthy level. It's not growing rapidly, but it's at a healthy level, and delinquencies are not a problem. You mentioned high-end delinquencies. I don't know what to make of that. I read the same thing. But so generally, and if you look at the banks, and when the banks talk about in their earnings calls, the performance of credit has been good. So essentially, you have a consumer that's in good shape and is spending, not at a rapid rate, but it's true, and it was, again, right in line with what we expected, the GDP data that we got this week. And I think it's still a little bit difficult to interpret because you have these massive swings in net exports, which may also be affecting, some of that can affect consumer spending as well. Look, it's one of the data points that we pay most careful attention to, and there's no question that it's slowed. And we're watching it closely, but we also watch the labor market and the performance of inflation. Those are our two variables that we're assigned to maximize.
And just to follow up on what my colleagues were asking about this dissent, Governor Waller said that the labor market is on edge, and he was pointing to weaknesses on the private sector. I was wondering, you've said that the main number to look at is the unemployment number overall, but what was the discussion about the state of the private jobs market?
So I'm not going to talk about any individual's, any individual's comments. I wouldn't do that. But I think what we know is that private sector job creation, certainly in the last report we'll see on Friday, but had come down a bit. And if you take the QCEW adjustment seriously, which it may be even lower, maybe close to zero. But the unemployment rate was still low. So what that's telling you is that demand for workers is slowing, but so is the supply. So it's in balance, oddly enough. You've got a very low unemployment rate, and it's kind of been there for a year as job creation has moved down. But also we know that because of immigration policy, really, the flow into our labor force is just a great deal slower, and those two things have slowed more or less in tandem. If you look at things like I mentioned, quits, look at wages. Wages are gradually cooling. Look at vacancies to unemployment. Those things have been pretty stable they haven't really moved a lot in a full year. So I think if you take the totality of the labor market data, you've got a solid labor market. But I think you have to see that there are downside risks. You don't see weakening in the labor market, but I think you've got downside risks in a world where unemployment's being held down because both demand and supply are declining. I think it's worth paying close attention to it, and we are.
Nancy. Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. One more question on the lack of unanimity in today's decision, the 2 dissents. Was there talk during the meeting? I know you're not going to talk about what individuals said, but in general, was there talk during the meeting of cutting rates, and what was the case against that at the meeting?
Yes, there was.
Sure. So, we have an economic go-around where people talk about the economy, and then that's yesterday, and then today we have a monetary policy go-around all the way around the table. Everyone gives their views. So the discussion around policy was, the majority view was still what it has been, which is that inflation's running above target, maximum employment is right at target. That means policy should be a little bit restrictive, somewhat restrictive, because we want inflation to move all the way back to its target. So that's where people have been and still are. 2 of our members felt that the time had come to cut, and that they, for the reasons that they're going to express. I won't tell you the reasons. They'll issue some kind of a thing in the next day or so. So, but that's the story, and I would say, well argued, very thoughtfully argued all around the table, good arguments, and it's a situation where. Unusual situation. The economy is in good shape, but it's an unusual situation where you have risks to both your employment mandate and your inflation mandate. That's the nature of a supply shock, and it's probably not surprising that there would be differences and different perspectives on that, as well as different views of where the neutral rate is, so that different views of how tight policy is. So we have those. I will say what you hope is that people, explain their positions very thoughtfully and clearly, and we absolutely had that today, all the way around the table. I would call it one of the better meetings I can recall from that standpoint.
And you said you're waiting to be confident inflation is heading toward your 2% target before you start cutting rates. When you do get that confidence, would you be in favor of lowering rates right away?
It's not quite the way I would put it. I said that's why we think policy should be restrictive, is because inflation is above target. When we have risks to both goals. One of them is farther away from goal than the other, and that's inflation. Maximum employment's at goal. So that means policy should be tight, because tight policy is what brings inflation down. If you came to the view that the risks to the two were more in balance, that would imply that policy shouldn't be restrictive. It should be more neutral, a neutral stance, and that would be somewhat lower than where we are now. No one knows exactly where that is. So that's the framework I think I'd be taking, and we'll just have to see. We're going to be obviously looking at a lot of data in the next cycle. It is one of the cycles where we have 2 employment and 2 inflation reports, and we'll see where that takes us.
Thank you, Mr. Chairman, for taking the question. Jeff Cox from CNBC.com. A metric that you like to cite a lot is the final sales to private domestic purchasers. That was down to 1.2% gain in second quarter from 1.9% in Q1, suggesting that there's some softening in underlying demand. I just wondered if you look at that, you combine that with some of the housing numbers, the weakness that you acknowledged at the top of your remarks, that the housing market is in fact weak, and the inflation numbers from GDP today came down to 2.1% for headline, 2.5% for core. I'm wondering how much more movement you would need to see from these data points before you would be comfortable with cutting in, say, September.
It's going to be the total. Hard to answer that specifically. PDFP, I think, for the first half, private domestic final purchases, or final sales, as people call it, was 1.6 on the first half. GDP, I believe, was 1.2%. That's the whole half. You mentioned the quarters. So those are slower, but GDP is bumpy quarter to quarter, half to half, and often gets revised, after the fact. The labor market data we still think continue to think is the best data we have on the economy, and that shows a 4.1% unemployment rate. It shows wages, still at a healthy level, but moving ever closer to what we would regard as long-run sustainable, consistent with longer-run productivity and 2% inflation. So the labor market is actually still quite solid. Inflation is above target, even ignoring tariffs. It's a little bit above target, and tariffs. So we're watching all of that, And again, trying to do the right thing in what is a challenging situation because you're being pulled in two directions, and you have to decide which of those it took to go in. And actually, at some point, if they're sort of equally at risk, then you really want to be at a neutral policy stance, which we're not right now.
So it'd be safe to say that if the data kind of stays in line with where it is right now, that you wouldn't be comfortable with cutting in September?
I'm not gonna say that. No,
Wow.
I just think we're gonna need to see the data. And it can go in many different directions. The inflation data
It's almost back up to 100.
Employment data, and we're going to make a judgment based on all of the data and based on that balance of risks analysis that I mentioned.
Thank you.
Greg, Rob, for the last question.
Thanks, Chair Powell. Greg Robb from MarketWatch. The Treasury Secretary has said recently that it would be confusing for the markets if you stayed on as a governor after your term as chair ends. And I was wondering if you had any update for us on a decision on that front.
Sorry, I do not have any update for you. Thanks very much, everyone.
Yeah.
The chairman of the Federal Reserve, his words. This was one of the better meetings that I can recall. Maybe you had to be there. In the equity market, we look like this. Equities shaping up as follows, down by about 0.2% on the S&P 500, on the Nasdaq positive by 0.04. The gains fading. If you check out the bond market, 2-year, 10-year, 30-year, unlocking this move right here, yields up at the front end of the curve by 6 basis points. The 2-year, 3.93. And when you...
All right, guys, the big takeaway I got so far out of this is, dollar up, Bitcoin down. So yeah, we got the Dixie almost back up to 100 after that meeting. It rose from 99.3 to 99.87. Still pamping too on the Dixie. Bitcoin fell again under Google today. So I think it was like this yesterday too. I don't know. We're number 7 still on the total market cap. Again, this is all short-term stuff. What's really interesting was crypto fear and greed during the meeting was 74. Didn't really feel like 74. Still sitting at 74, so it's not like fear and greed has really changed much. The overall sentiment, the stock fear and greed index right now sitting at 67. Again, a little bearish considering we've been in pretty much extreme greed these last 2 weeks. Right, it's kind of weird for the U.S. stock market to kind of come back on that. And then I saw some of you guys in the chat saying that Donald Trump was posting some stuff on True Social, but I couldn't find anything on True Social, just him talking about India. I think that's the latest thing he has up there. Environmental scam 4 hours ago. I don't know. But yeah, that's what's going on with Trump's True Social right now. And then yeah, you guys in the chat, I seen some of these comments, man. They were crazy. He's a robot. Same speech as last time. Yes, he is. Powell wasn't cloned. He's just an AI chatbot. Yeah, there were subtle jabs at Trump. Alec was screaming from the rooftops, "Put a girl on! Put a girl on!" My God. Yes, yeah, pal. Chowda, says Matt Adam. You guys are crazy. Yes, some of the highlights, of course, from the FOMC meeting. Comments here. Matt Adams says it was a good bullshit, good amount of general bullshit. I bet Powell got picked on as a kid in high school. 100% agree with you there, Spencer. Taxpayer is always left holding the bag. Yep, always left there, Alec. Jake is saying, yeah, DBCN, of course, is going to pump after this Fed meeting, more than likely. As we were watching the Fed meeting, it was the only thing in the green. Right now, it's down a tiny bit now since the Fed meeting has resumed. Everything's in the red right now. Literally, everything's in the red. Okay, so yeah, what else we got here? 53% of taxpayers go live paycheck to paycheck. That's more than half the American population. Jake and says minutes need to go public too. 100% agree with you, Jake. Again, he said there was no issue with the roundtable. That wasn't what everyone was reporting before the Fed rate decision was made. There was a little bit of a discrepancy between other governors at the Fed. Okay, so Mr. T does something to rock the ship. I hope he does, says OG Popan. Yeah, he will. I mean, there's no question. He's gonna want some more winning. You may even get tired of winning. We didn't win today, that's for sure. Mr. T says no capital gains tax until Powell cuts. Oh, damn. Yeah. Is that real? Jake, you can't put that in quotes, my guy. Oh man, that's not how quotes work. All right, man, you're gonna freak the whole market out saying stuff like that. But yeah, it's a pretty, it's a pretty meh kind of day. Again, that's why I'm fidgeting around with a diamond, literally sitting here holding my bags, guys. Diamond hands. It's this all today is basically just a test of patience. I think my portfolio is only down like 10 grand today. I can't really complain in the grand scheme of things. Cody Bakula, yes, I love this community, of course. Thank you, Cody. Thank you. Oh yes, of course the King of Ohio says so. That's I guess let it be done. Let it be done. I mean, you don't have to pay income tax on Bitcoin in your state. Right, so I mean, maybe the rest of your constituents can push that legislation to the rest of the country. All right, guys. So that's all we got today. Again, it was kind of a lackluster day, kind of boring, and the calm before the storm has finally ended. And hopefully we'll start to see a little bit of negative price action with a huge move to the upside. Usually how it goes, guys. We usually see a big dramatic drop like we're seeing right now with Bitcoin, and then usually a pamp twice as much to the upside. We'll see if we can finally break out of here. I don't care if we break up or down. Let's get out of here, man. We've been range bound here for like 2 weeks. It's been getting kind of boring. 116,000, 117,000, 118,000 is basically the new 103. Remember when we were stuck at 103 for like a month? Yeah. You guys know. You guys who know who you've been here long enough, you know what I'm talking about. Again, sideways price action. At least we're not stuck at 69. Man, last year sucked. It's 69 all freaking year. 69. Of course, range bound, previous all-time high for Bitcoin last year. If you go back to the 4-hour chart, I can show you what I'm talking about here. Down maybe a little further. Day chart. There we go. This whole thing right here. Boom. This whole thing was a nightmare right there around the 60s. It took the whole freaking year to get over that. From the beginning of the year when we first broke out in March, February, March to October. We were range bound 69. It's crazy. Here we are. It seems like we're doing kind of the same thing right now. Thank God it's not that long, not half a year or 8 months, but it feels like it, man. It feels like we've been here forever. It's only been a few weeks. All right, guys. So that's all I got for you right now. Of course, we're going to be back again at 8 p.m. to do our regular scheduled programming, and yeah. We'll get back at it, guys. So have a great day. Go out there and touch some grass. I'm still working on the studio. I got all this done today. You can kind of see it. Sort of. Oh, I could probably get the lights on. Boom. Yeah, so I got his whole wall done now on this side of the studio, and I'm working on the back behind me. What's next. Coming next is this whole thing behind me. Boom. I got to go the whole floor to the ceiling. Hopefully I probably get that done today since I'm not doing any appointments. All right, guys. So that's what I'm working on today. Hopefully you guys are getting some stuff done. Again, do what you can before it's too late. You won't have any time to be away from your computer screen. And we're going to be entering no sleep zone. When we're in no sleep zone, you ain't going to leave the house. It's just going to be sitting in front of computer trading all day. So I'm getting excited. We're getting closer. It's just... we have a little longer to go. God damn it, pal. You could have started it up a little early for us. But it's fine. We'll move on. Get through it as we continue. Yeah. All right. So anyway, guys, it's always hard to leave. I'll catch you guys tonight, 8 p.m. Eastern Standard Time. Stay safe. Don't do anything stupid. Right before the bull run. Later.
Fly me to the moon, let me trade among the stars. Let me see what freedom's like without money and gold bars. In other words, hold my king. Oh! In other words, let's make history. I should
Just a quick little reminder before I head out. We are starting to maybe print the first green candle since Jerome Powell came back out. And guess where we landed, guys? Right on top of our bear target from last night. I can't make this crap up, guys. We're gonna win so much. Winning you so much. May even anyway. Get tired of winning. All right, guys. I'll catch you guys tonight. Have a good one. Later. Peace.
Watch the cash burn, lead fade. A new world rises. We've made the trade. The robots are rising. He's taking the crown. But we're the ones that will back down.
Bang.